there's certainly some pessimism going into the second half of 2019, but there's also green shoots. You know, you saw optimism in Micron's forecast recently, Applied Materials acquiring Kokusai Electric, the Japanese company, really some bets on recovery here. But regardless, whether the recovery starts in the second half of 2019 or going into 2020, I think long term the demand is there. Whether it's 5G, AI, the Internet of Things, you're going to see rising chip demand over the long term. So people, I think, are a little overly focused on short-term swings here.
Jason, to that point, what is the relevant read across for the U.S. tech names from Samsung this morning? Because, yes, things were down significantly year over year, but revenue was only down 4% year over year. It was the earnings that declined more significantly. And both lines were actually a beat relative to where expectations had got. So are things already priced into the U.S. stocks?
Yeah, I'm not sure there's a real broad read-through with U.S. technology. I think certainly one could point to a couple of areas and say, well, with memory chips, what does that say about the supply chain in semiconductors and by extension some U.S. stocks? We don't own any stocks that we think it's going to hurt directly in our portfolio. But as we look at technology in the United States and some of the areas that we're focused on, these are more secular growth in nature, so we're not subject to the cyclicality that semiconductors often are hit with, and certainly less focused on the China-U.S. trade war, which is, these semiconductor stocks are right in the middle of that. So, I think I'd be careful with the read-throughs. I don't think there's a whole lot that investors should be taking away from this. I think it's a Samsung-specific issue with certainly some softness in the inventory channel for memory chips.
So, Jason, if you're looking for growth in tech, but semis aren't the place to find it, where are you investing?
Yeah, no, really great question. And I think you can find some really good stocks in software. You can see them in cloud, certainly in areas like internet. I mean, Alphabet is a great stock that we own at secular growth in nature and is trading at 20 times forward earnings. We think Apple is still a nice relative value here, trading around 15 times forward earnings, 12 times X cash. And, there's a lot of people that are too bearish on Apple, but if we look out beyond our noses, I think there's a really exciting services story to be had there. So there are opportunities to be sure in areas outside of semiconductors that are more secular growth in nature, and we feel more comfortable with as a result.
Sam, at the FANG names, you like Google?
Agreed. Yeah, I think Jason hit it right on the nose with Alphabet, long-term secular growth, reasonable valuation. There's just not a lot not to like about that stock.
Give us one of the other names that you like in other sort of smaller cap names in tech.
Yeah, one stock we're really bullish on is Lumentum. They are best known for making the components of Apple's Face ID technology. And so there's obviously been a lot of bearishness there with the stall out of iPhone growth. But we think there's a lot of opportunity to translate that technology into other cell phone makers, other applications. And in addition, they're really strong in the optical components sector for telecommunications. I think 5G is a big growth driver there for them as well.